Hi guys, welcome to this Moneycontrol live stream. You're watching Opening Bell with me, Nandita Khemka, back after a midweek break, and looks like we are poised for a negative start this morning, given the fact that the Nasdaq saw its worst day since December 2022. In fact, we saw chip stocks or semiconductor stocks take a tumble on the back of the comments that have interview that Donald Trump made, and the comments that he made on tightening further curbs on China, and also some comments relating to Taiwan. So that sent all of these semiconductor stocks plummeting in trade, and we saw Nasdaq tumble by almost 3%, although it was a mixed close on Wall Street. But GIFT Nifty, of course, as I said, is hinting at a negative start, and we have a lot of stocks in focus over the next 2 or 3 sessions, because we just have 3 sessions to go for the budget, and we have 35% of Nifty companies reporting earnings over the next 2-3 days. So lots to digest, a very news heavy week ahead, and we'll see how the setup really pans out. But of course, your stock related queries will be in focus as well, aside of all the stocks in news. So if you have any queries, keep them coming in on our live feed on YouTube. We'll try and take them up. But before we move any further, take a look at the top headlines. The Nasdaq sees its worst day since December 2022 as tech and semiconductor stocks sell off. The S&P 500 also corrects, while the Dow outperforms with gains of over 0.5%. Asian markets trade largely lower, and the GIFT Nifty looking negative at the start. Crude prices surge with Brent back above $85 a barrel as US crude inventories fall. In fact, gold on the other hand has hit a record high on hopes of a rate cut in September. SEBI proposes creating a new asset class that will bridge the gap between mutual funds and portfolio management services. The market regulator aims to offer regulated, higher risk investment products and proposes a minimum investment threshold of 10 lakh rupees to deter small retail investors. Asian Paints, in fact, report weaker than expected first quarter numbers. Margins hit multi-quarter low, while tough demand conditions result in a drop in revenue. In key earnings to watch, Infosys likely to report industry-leading revenue growth in the first quarter, and all eyes, of course, will be on the guidance. Well, looking at the setup, before we get on board our technical guest for today, the markets did end with minor gains on Tuesday. It was a record close amid volatility. The Nifty ended above that 24,600 mark for the first time. In fact, the top contributors on the Nifty on the positive side were the likes of ICICI Bank, Bharti Airtel and HUL. Aside of that, if you look at the Nifty Bank Index, that slipped again, 60 points down at 52,397, so below 52,400, and the mid cap index was largely flat, had a flat close on Tuesday. In terms of the top performers on the Nifty, we saw Coal India reacting to a very positive brokerage note by Phillip Capital. That stock was the top Nifty gainer on Tuesday. And if you look at the FNOQs, the put call ratio dropped to 1.25 vis-a-vis 1.33 levels in the previous session. Lots of stocks in the F&O ban today as well. New entrants include the likes of Balrampur Chini, Parimal Enterprises, Vedanta, and stocks that will continue to stay in F&O ban are the likes of Chambal Fertilizers, GMR Airports, GNFC, RBL Bank, Hindustan Copper and the likes. But 2 or 3 stocks have exited the F&O ban list. They are Aditya Birla Fashion, India Cements as well as Indus Stars. In terms of fund flows, domestic investors remained net sellers worth 529 crore rupees or thereabouts in the cash market. FIIs continue to be buyers now. They have been buyers for quite some time now. So 1200 crore rupee worth of stocks were bought in the cash market by foreign institutional investors. But on that note, let's bring on board our technical guest for today. Joining me is Chandan Taparia of Motilal Oswal. Chandan, great to have you on the show. Would you expect some bit of cool off now that we managed to shut shop above 24,600? Yes, but cues are fairly negative when it comes to the global markets.
Good morning, Nandita. Thanks for having me. So Nifty is continuously holding the gains. We have noticed that it is continuing its winning streak for 7th consecutive weeks, and every small decline is being bought. So bulls are having dominance in the market, and every small decline is using as a fresh buying opportunity. So there's the reason that if market corrects by any 50, 100, 150 points, that is going to be a fresh opportunity to commence the next leg of rally. So I believe that till Nifty holds above 24,400 zone, we suggest to buy any decline and look for an upside move towards 24,900 to 25,000 mark. So here I'll continue to be with major trend that is bullish and suggest to go for buy on decline in the market.
Okay, buy on decline, that should be the strategy. But how would you really be positioned ahead of the budget, Chandan? Would you look at index in terms of FNO bets, or would you look at playing stock specific?
I believe that stock specific action will reward more in this market scenario. However, the index is also holding well, but couple of indicators are giving overbought scenario, and because of the overbought, some sort of consolidation could be there in the market at higher zone. But till major levels are respected, I believe we have to be with the bullish stance in the market. I believe the volatility could see some spike. The volatility index, which is now near 14, can spike to 16 or 18 zone. But I believe stock specific action will reward more. So positive on the selective FMCG name. And now the government will focus on the budget on 23rd of July. And I believe the entire focus will be on the rural India as well. So selective FMCG counters will do well. So positive on the Marico, Dabur, Tata Consumer. Apart from that, real estate stocks will be in focus, whether we talk about Godrej Property, DLF, Prestige. Selective IT stocks could provide the margin of safety with momentum. So these are the sector and stocks which are likely to do well. And apart from that, we cannot forget about the defense and selective Nifty CPSE stocks which are in positive alpha in this market scenario.
Okay, you mentioned FMCG, of course. We have a query coming in on HUL. Since we are talking about FMCG, might as well get it addressed here itself. HUL was among the top contributors on the Nifty day before yesterday, on Tuesday. Any levels that you'll be watching out for here in terms of upside resistance?
Yeah, so Nifty FMCG index itself is doing well, making a high top, high bottom from last 8-10 days, continuing its winning streak, and most of the FMCG stocks have really done well. Talking about Hindustan Unilever, it rallied well from 24-27 to 27-25 zone. So supports are intact. It managed to give a decisive rounding formation breakout. So till it holds above 26-20 zone, we believe this momentum could extend towards 2800 in HUL. So those who are holding can continue with trailing stop loss, as the stock has been making higher lows on the daily scale.
Okay, that's the view on HUL. Hope that answers your query. But from FMCG, let's shift our focus to the IT pack that has been hogging the limelight ever since TCS came out with its numbers. Last Friday, we saw a very strong up move coming in on the IT index. TCS topped expectations. Infosys is slated to report numbers today. Just briefly, let me take you through the expectations. Revenue and margins may return to growth in the first quarter. Ramp up of large deals, operational efficiency could drive revenue growth going forward. Revenues are likely to rise by 2.4% on a quarter-on-quarter basis. Net profit is expected to decline by 21.6% on a QOQ basis, while EBIT margin is expected to rise by 50 basis points, I beg your pardon, to 20.6% or thereabouts. In terms of all these large cap names like HCL Tech, TCS, Infosys, any preference that you have where you could say with conviction that the charts of this particular stock is looking much better vis-a-vis the peers?
So Nifty IT has seen good decent recovery from lower levels. We have seen rally in TCS, Infosys, and most of the IT name. But from last 2 days, most of these stocks are finding some sort of consolidative move. So there is a reason I'll go with the other name, that is Infosys. Technically, it has given a breakout from an inverse head and shoulder pattern, which has bullish implications. It has been making high top, high bottom on the weekly scale, and apart from that, it has given a consolidation breakout with a decisive hold above 2650, 2700 zone. So with support of 2720, Infosys has potential to extend the rally towards 2900 zone. If you talk about non-FNO name in IT, then I'll focus on the KPIT Tech, one of the strongest counter with support of 1815. It can extend the move towards 1930, 1950 level. So I'll prefer on Infosys and KPIT Tech in IT basket.
Okay, tilt towards the mid-cap IT, that's what I could figure out from your answer, Chandan. But what about Wipro? We just talking about the stock because we are getting a query on this stock as well from Abhishek Prakash. He wants to know whether he should buy it with a 2 to 3 month time horizon. Would you advise, or would you advise him to stick to these names that you've just mentioned?
Yeah, it's better to be with the name which I mentioned, but Wipro is also holding well. Technically speaking, it has given a breakout of 27 long months. So 2 years consolidation breakout. On monthly chart, it completed a cup and handle patterns, rounding formation, and then a small decline, and then rounding turn. So such kind of pattern indicate positive move could be there, but that will take time as it has formed in weekly and monthly scale. So recommending on the positive stance, one can hold Wipro with support of 540. Overall, we are expecting a run up to 600 to 630 on positional point of view in the Wipro.
Okay, that's about Wipro, but let's also shift focus to the paint space because Asian Paints came out with its numbers. The numbers have been disappointing. Margins are at multi-quarter low, came in at 18.9% vis-a-vis 23.1% on YY basis. Domestic volume growth came in at 7%. International business sales declined by 2.5%. Of course, we saw that the company has taken a price hike recently after many months of price cuts. Management has also indicated that they could look at further price hike if inflation rises. Brokerages have also maintained their underperform calls. Targets have been cut as well. Q1 has been sharply lower than estimates. What are your own thoughts as to how really Asian Paints is going to perform? But we'll just come to that. We'll come to Asian Paints in a bit. Just waiting for the opening bell. Yes, there you have it. We have the opening bell. We are looking at a muted open, negative open. The Nifty is down somewhere around 60 odd points, around that 24,550 mark as we speak. It's a triple digit 200 point kind of a cut on the Sensex as well. Mid caps mirroring that sentiment, 0.5% lower for the mid cap index. Small cap should also come up on your screen, and that should also be in the red itself, because small cap is managing to just about hold on to the positive zone, but it is a muted open in line with the kind of cues that we are getting from global markets. The Nifty Bank index has also slipped below that 52,300 mark. Almost a 200 point cut coming in there, but I want to look at the IT pack ahead of Infosys numbers. Want to see how IT is faring. It is holding out strongly in an otherwise subdued market. 0.5% uptick on the Nifty IT index in anticipation of industry-leading revenue growth from Infosys. So that, of course, will be watched out for. We have Wipro also reporting numbers tomorrow. So IT pack continues to hog the limelight. Almost a percent uptick on the Nifty IT pack. Infosys as well, 0.5% higher ahead of earnings. What else is doing well today? The energy pack is holding out, 0.3% kind of an uptick coming in there, given the fact that we've seen Brent surge past that $85 per barrel mark once again. Aside of that, if you look at some of the other pockets, I want to see how Realty is doing. Realty did well on Tuesday, so let's see how. Realty is pretty flat. So yes, all in all, it is a weakish open. IT pack, of course, holding out ahead of Infosys numbers. In terms of individual performers on the index, we have LTIMindtree. Numbers came out yesterday. Reacting to that, Apollo Hospital, Infosys, TCS, as I mentioned, Infosys, TCS, Wipro, LTIMindtree, HCL Tech, and Tech Mahindra. All the IT names are doing well and among the top Nifty gainers. Apollo Hospital from the Pharma pack is doing, healthcare pack rather, is doing well. Some of the private bank names like HCL Tech are holding out. Bharti Airtel continues to gain. ONGC, HDFC Life, Power Grid are some of the other gainers. On the flip side, Asian Paints top loser on the Nifty. In line with how the numbers really panned out. Weak numbers, margins at multi-quarter lows. Bajaj Auto also saw a sell call from UBS, so that's also reacting to that. Hero Moto, Eicher Motors, entire auto pack remains under pressure. Cipla from the Pharma pack, and HDFC Bank continues to be in the red. So yes, that's the market open for you, 24,570. That's where we are perched at the current juncture. Chandan, looking at the open, first of all, your thoughts on Asian Paints, whether it's a buy, hold or sell, and secondly, what would you be recommending for viewers with a 2 to 3 session time horizon in terms of stock picks? How should one navigate?
So first, to talk about Asian Paint, the stock has gone into consolidation phase. It lost its momentum which it used to have earlier. It has been consolidating from last 14 long weeks with multiple hurdle near 3,000, 3,030, 50 marks. However, the good part is that we have multiple support near 2,800 zone. So those who are looking for some positive to range bound distance can look at the support near 2,800 to go for buy on decline. But again, need to understand that 3,000, 3,050 is going to be the multiple hurdle. So one is to trade this border range in the market. Now looking at the stock wise, we have discussed about the couple of names in realty in FMCG. So I think I'll stick to those names given the market scenario. So positive on the Marico, one can buy with support of 660 and expecting this stock to extend the move towards 700 zone. So most of the FMCG stocks are likely to do well. Marico, Godrej, CP, Tata Consumer are likely to be my preferred pick. But yes, here I'll suggest to go long in Marico, expecting 3 to 5% run up. Positive on the selective auto ancillaries name, whether we talk about Apollo Tire or counter like Motherson Samvardhan or Motherson. So Apollo Tire one can buy on a small dip with support of 535, and Apollo Tire can extend the rally towards 570. So most of the FMCG name, few auto ancillaries, couple of IT name could be in focus in the market.
All right, those are the stock recommendations coming in from Chandan that you could be keeping on your radar. With that, Chandan, hold that thought. We'll come back and take up more viewer queries with you. But in the meantime, I'm also joined by Aditya Khemka, who's the fund manager at InCred Asset Management on the show. Great to have you on the show, Aditya. First of all, just to talk to you about the pharma pack, how worried should one be of all the US FDA action on pharma companies? The likes of Sun Pharma, whose Dadra unit has come under US FDA lens. You have Cipla's Goa unit as well, awaiting a resolution. As one turns towards defensive, how big an overhang will regulatory action continue to be for pharma?
Good morning and thanks for having me, Nandita, on the show. So look, US FDA actions are not new now. I mean, we have been seeing US FDA actions for most of these large pharma companies for the past decade. And one must say that they have done well to diversify in terms of, the number of plants that they are reliant on when it comes to a given ANDA or at least high ticket ANDAs. So I think from the earlier days, 5 years, 10 years earlier, when these US FDA actions would have resulted in significant earning downgrades for most of these large pharma companies, today the impact is relatively lesser. However, what is disheartening is that we just still keep getting into the US FDA problems, which, one would have thought that after 10, 12 years of scrutiny from US FDA, the industry could have caught up pace. But I'm told that it's a moving goalpost. FDA keeps changing regulations, keeps adding problems. So definitely, it is disheartening to see the fact that they still get into the US FDA problems. But having said that, they have done well to diversify their ANDA basket into multiple facilities, which reduces the earnings impact of US FDA actions on a given facility.
Right. Just want to get in your thoughts on the specialty chemical space as well. Since this is one pocket that's yet to fire up, and we get a lot of queries as to whether one should now look at specialty chemicals given the kind of valuation comfort that they offer in terms of in comparison with the other pockets in the market. Should one look at nibbling into some of these specialty chemical names now? Do you think the time is ripe for that?
So there are two things I would like to highlight here. One, I think the word specialty chemical is fairly abused in the marketplace. Not all chemicals are specialty chemicals, but most of the chemical companies like to call themselves specialty chemical, whereas in our view and understanding, many of them end up just being bulk chemical companies, nothing specialty about it. Having said that, within specialty chemical space, we prefer companies that are more doing business for larger FMCG or healthcare or industrial giants globally and have a sort of a captive customer base. So CDMO within the specialty chemical space is what we really like. What we do not like is, when companies essentially manufacture bulk chemicals and call them specialty chemicals. So one has to be very bottom up in the specialty chemical space. You have to decipher whether a given stock is specialty chemical or just bulk chemical, hiding under the name of a specialty chemical. And then you have to decide, what valuation you're okay to buy it at. Just to remind our viewers, I think 10 years back, most chemical names are trading at 8 to 12 times PE multiples, and that was really cheap. 2 years back, most of these were trading at 40, 50, 60 PE multiple, and people thought that was also cheap. Today, it is trading at 25, 35 type of range PE multiples, and people are still thinking it's cheap. So, it's not a blanket statement. I mean, you have to understand which company you are buying, what is the product portfolio, how sticky is the product portfolio, and how high ROE can the company maintain or sustainably over a longer term. And then you decide what multiple you buy them at.
Okay. Going forward, Aditya, how should one really play the healthcare theme? Would you suggest looking at hospitals diagnostics, or would you say that the large cap generic names like Cipla, Dr. Reddy's, Sun Pharma are the safer bets?
So look, I think in our InCred Healthcare portfolio, I can tell you what we're doing. So in there, our largest overweight today is diagnostics. So we hold about 24% equity in diagnostics in our portfolio versus 2.5% weight in the index. So you can gauge the amount of overweight we have on diagnostics. Second most bullish, we are on branded generics, not the unbranded generic companies, but the branded generic companies for whom the largest business is the India business, where capital allocation is not a problem, and OPEX is higher than CAPEX, and hence your margins are high and your balance sheet is lighter, so your ROE tends to be high in that business. And third largest bucket where we are bullish is on the API side, where again we are on the CDMO companies. So be it chemical API, be it a pharma API, be it whatever. So on the CDMO side we are bullish, and then we are equal weight on hospitals, because we feel many of the hospitals have just gone far ahead of their intrinsic value. So I think that's where investors need to be cautious. You again need to do a bottom up on hospitals. The right ratio to look at a hospital is EV to OCF, enterprise value divided by operating cash flow. Now, if you look at that ratio, certain hospitals are trading at 70-80 times, which is basically 70-80 cash PE, if you would want to call it that. And certain hospitals are trading at 20 times. And there's not a significant difference in the business models of the hospitals that we are talking about. So, you're better off buying the cheaper ones, because you're getting a similar ROE and growth profile as the more expensive ones at a much cheaper valuation. And last but not the least, we are very, very underweight on the unbranded generic space. Why? Because we believe one-time product opportunities like Revlimid, Spiriva, and some other products which are in shortages today are giving them extraordinary profitability, which is not sustainable. So it may be there for a year or two, but after that, these earnings will go away, and these companies will probably report decline in earnings.
In terms of expectation from the first quarter numbers, would you say that pricing pressure in the US would be a thing of the past for pharma, or do you think it's still a work in progress?
So no, if you look at it, most pharma companies, even for the past 2 years, have been talking about pricing pressure. It's just that they got a Revlimid or a Spiriva to hide that pricing pressure, because the overall US revenue is disclosed. These pharma companies don't disclose the revenue from their highest product or their largest product, so you don't know how much they are making in a Spiriva or a Revlimid. And hence you get to see the entire US numbers, which are looking good, for the last 2 years. But that, in my opinion, is driven by these one-time large product opportunities, which are not sustainable and will not recur in future. So I think pricing pressure will be talked about again in this quarter, because pharma companies can, tend to tell you that the 5 to 6% pricing erosion in US is normal. My point is, even though if it is normal, it will always be a drag on the profitability, because if your price keeps declining, you need to produce more volumes to have the same revenue, which means on a lower absolute EBITDA, you will have a higher asset base, which means your ROE will keep coming down. So, that is the reason why we don't like the unbranded generic business model. But we expect the pharma companies to talk about pricing pressure in this quarter as well.
Okay, pricing pressure will persist, and pharma companies may speak about that this quarter itself. But a couple of more questions. I know you don't really talk stock specific, but just want to get in your thoughts on Aurobindo Pharma in particular, because it will be considering its maiden buyback today, right? In terms of the prospects from here, the stock has rallied somewhere around 80% over the last 1 year. Do you see more valuation headroom for this stock?
So look, on the unbranded generic side, we feel that the right valuation multiple can be anywhere between 8 to 12 times PE multiple. The name that you referred to, I don't exactly remember what valuation they are trading at, but I think 8 to 12 PE is the right PE to value some of these unbranded generic business models. And if the stock is below that, then it may be a good trade to get into. Remember, unbranded generic stocks can mostly be trades and not structural buys, because the business is so volatile, the pricing pressure is so volatile, the one-off product opportunities keep coming and going. So you have to be very, very clear about your entry and exit points. And they have probably got a balance sheet which is slightly levered. I think now they have paid most of the debt down, but I think some of the debt is still there, so one has to be cognizant of that as well. But a buyback, etc., is definitely a good move for any company, because if you're returning capital to shareholders, which also basically indicates that you're probably not finding enough new opportunities to deploy capital. And then one has to then therefore think about what kind of growth these companies can deliver if they're willing to return capital and not building more capacity. Because unbranded generic is a game of capacity. You can only keep growing till you keep expanding capacity. Otherwise, your growth stops. So, you have to take all of these things into consideration and then take a call. So I wouldn't be able to give you the answer for a window,
Right.
simply because we don't track it that closely.
All right, I appreciate the fact that you still spoke about this stock. But lastly, any particular expectations or on the wish list from the FM in the budget? R&D support, policy support. These are some of the things that pharma industry per se, is seeking from FM. On your list, on your wish list, is there anything in particular? You guys must have had internal conversations about what one can expect from budget. Anything that you would like to share with us?
So I would like to more focus on the National Health Mission budget, right? The allocation to the National Health Mission, digital health, because the space that we are bullish on, which is healthcare, which is basically diagnostic, hospital, CDMO, etc. They keep getting some allocations from the central government in terms of the allocation from the National Health Mission. So I would like to see the government spend more on healthcare for the poor, on affordable healthcare, and try to subsidize that segment through government agencies or insurance plans or whatever it is, because that will improve the accessibility and affordability of healthcare for the masses, and it will also improve the volume growth and the occupancy rates for the companies that we own. So I think do good, be good kind of situation. So if they allocate higher sort of number for the healthcare for poor, then the kind of stocks that we own, they will benefit from such an allocation.
All right, that's the kind of expectation of wish list that Aditya has from the FM. But Aditya, on that note, thanks a lot for taking our time and sharing your thoughts with us. It was a pleasure chatting with you, and I hope to connect with you post, the numbers from pharma giants like Cipla, Dr. Reddy's, Sun Pharma as well, and getting your thoughts on what you make of their quarterly report cards. Thank you.
Sure.
Well, with that, let's go back to Chandan, who's been waiting by. Chandan, before I come to queries, I want to get in your thoughts on a Just Dial. The stock is up 15%. Good set of numbers. In fact, margins have almost doubled, if you see, on a YOY basis, 28.7% vis-a-vis 14.8%. What would you do with a Just Dial now? Would you look at booking profits?
Just Dial, after Nandita, Just Dial has seen a decent run-up recently and set for a major breakout after a low monthly consolidation. I believe this is going to be the highest level since December 2015. It's almost 9-10 years long consolidation breakout. And I believe a decisive hold above 1120 can take it further up by 20-30%. So I think after a long time, this breakout is happening, which is turning the major trend to positive. So there is a reason that we can hold the position also with support of 1120, 1130. And this stock has potential to now scale up towards 1350 to 1500 plus zone soon.
Okay, that's the view on a Just Dial. But let's take up some queries then that are trickling in this morning. I want to get this query on tea stocks addressed, because of course it's rainy season and tea is my favorite beverage any which ways. So we got a query from Srivardhan Gupta, wants to know your thoughts on McLeod Russell. He wants to know whether, I don't know whether he holds the stock or not. He wants to know your thoughts on what should be done with this stock. Tea stocks have been in focus, shortage and, rising raw material prices. These have kept the stocks buoyant. One of the sessions last week, some of these tea stocks were buzzing. But if you look at the last 5-day returns on a McLeod, it's down somewhere around 10% or thereabouts. So, how should one really navigate tea stocks now? Would you advise taking positions now?
So talking about your favorite beverages, some sort of consolidation is there. I don't see major momentum. But yes, range bound bias is clearly visible. It is multiple support near 26 with hurdle at 34, 35. So I think it's likely to be in that range. And especially in last 5 days, we have seen a corrective move from 35.50 to below 30 level. So let it correct and find the major support, then only I think some sort of recovery could be there in the counter.
Okay, that's the view on McLeod Russell and the tea stocks, on the whole. But I want to take up a query on Castrol India. This stock has done very well in the last 1 month. In fact, the company has forayed into lubricants for cooling of data centers. That is the next big thing. So the stock has been in focus, and we have a query coming in from Dheeraj Sharma on this particular stock. Wants to know your thoughts on Castrol India for the long term. After such a good move, would you advise buy on dips?
Yeah, so Castrol has recently given a breakout from its pole and flake pattern, and after that it rallied, but some sort of consolidation we have noticed due to the market pressure. I believe any decline towards 250 could be bought for an upside move towards 275 to 300.
Okay, that's the view. I hope that answers your query on Castrol India. But the other query that I'm getting is on an NMDC. Hasn't really been able to fire up in the last 1 month. At least it has done well in the last 6 months. But the momentum has fizzled out. In the last 1 month, we've seen negative returns of somewhere around 8% or thereabouts. Aju Onion wants to know your thoughts on this stock. Buy, sell or hold? What's the call here?
So talking about NMDC, I think hold. It might see some corrective move before starting the next leg of rally. So as of now, given the price structure on the daily and the weekly scale, it can see some profit booking decline, which can lead the counter towards 225 to 230.
Okay, that's the view on an NMDC. But very quickly, a query on Paytm. This one has come in from Mrinal Banerjee. Wants to know whether it should be held or would you advise booking losses if they've bought it at higher levels, or I mean, how would you advise them to hold or navigate this stock?
So advice to Manal is that Paytm has been making lower top, lower bottom on the big time frame. It has seen a corrective move in last 3-4 years, all the way from 1955 to 300. However, the good part is recently we have seen decent recovery, but again the follow is missing. If it goes above 500, then on the setup and sentiment could change. Otherwise, it can retest 435 to 440 zone. So if you are ready to bear that kind of decline to again form the positive pattern, then only you can hold. So 430, 425 is the major support for the counter.
Okay, those are the levels. 430 major support for Paytm. But one query on alkyl amines from Maheshwar Bhanu. He wants to know, is it worth holding for an exit target of 2500 rupees in the near and medium term? Stock has gone nowhere in the last 1 month, almost just 2-3% higher. Of course, chemical stocks have not seen such a great run. In the last 6 months, the stock is down 14%. Would you advise a 2500 kind of target, a play with that kind of target in mind?
I think better to exit because the structure is weak and we are not much positive on the selective chemical name, where trend is negative on the short term and the medium term point of view. So suggestion is try to exit on any small bounce.
Okay, exit on small bounce. That's the advice here. But just a last query for the day. This one is coming in on IREDA from Kishore Pujari. Now this stock has been a high flyer, since listing. It has already been a multi-bagger, right? So wait for more profits or take profits off the table?
If you're getting profit, then you can exit and then again try to enter once it goes to 210, 220. So if you're getting profit, you can book and try to accumulate again at lower levels. Overall positional point of view is positive, but I believe any decline could be bought. Major support is near 180, can accumulate near 210, 220 for positional target of 300, 350.
Okay. Also, lastly, want to get in your thoughts on a Bajaj Auto. UBS has a sell call on this stock. Top Nifty loser right now. Any support level that you will be watching out for here? Should one average if they already hold Bajaj Auto?
I think let it consolidate. The good part is now the stock is near to major support of 50-day exponential moving average. So let it come near 9200 to 9050, 9200 to 9250 for any kind of accumulation in the counter.
Okay, that's the view on Bajaj Auto then. But with that, I think we've come to the end of the query segment. Chandan, always a pleasure interacting with you. Look forward to our next conversation. We also have the budget next week. So look forward to interacting with you on that occasion as well.
Thank you, Nandita. Have a great day.
Thank you. Thanks a lot. Well, with that, let's take a look at what the markets are doing at the current juncture. Well, we are weak. Of course, it is a subdued day. 24,550 has been taken out. The Nifty is down somewhere around 80 points. Sensex down almost 300 points. Mid and small cap indices are witnessing deeper cuts because the mid cap index has slipped by 1.5% as we speak. The Nifty Bank Index trading with mild losses. The texture of the markets, of course, remains on the lower side today. We'll see how things really pan out, if we can see some bit of reversal in the last half hour of trade or not. But with that, completely timed out on this edition of Opening Bell. Thanks a lot for tuning in. You have a great day and come back and join us on Closing Bell at 3:30 p.m. Have a great trading day and stay tuned to Moneycontrol for all your other news and updates. Thank you.